You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Thank you, guys. Good afternoon and welcome to the 36th Options Industry Conference. My name is Greg Ferrari, and I lead the business and product strategy within the U.S. Options Division for Nasdaq. We're in Amelia Island this year, and most that I've spoken with about the location appreciate that they're able to get here in 3 hours. But if I was only so lucky from my room to get here within an hour, that would be good too. When we left the mountains of Arizona last May, we identified the needs of 4 customer segments: millennials, the Silicon Valley Retail Options Group, European investors, and financial advisors, amongst others. Each segment has their own set of needs and challenges within the options market, with the most common challenge across each segment being widening quote widths as the advertisement to the consumers of our product. While that remains a challenge given the myriad of strikes and the growing number of exchanges for which our market participants can access or provide liquidity, I believe that we are beginning to address each challenge as we can thank this conference for bringing those issues up and tackling them head-on throughout the year. But we have much work to do amongst all of us to do more than just highlight these as issues. We need to work together to set reasonable goals for resolution of these issues so that we can continue to grow as an industry and attract many different customer segments to our very robust and liquid markets. My ask of all of you over the next few days is that we all consider each other as their customer at this conference. The conference is a perfect time for all of us to reflect on what we are doing well and where we have room to improve as an industry. Across the spectrum of participants at this conference, we have the sell side, we have the buy side, we have market makers, we have wholesalers, we have clearing firms, we have exchanges, we have the regulators, we have press, we have technology vendors, and we have industry trade groups. By treating everyone as their customer, we will listen and learn from one another on what we need to do. When you listen to your customer, the answers on what we need to do first become much clearer. Our industry offering should always center around the end users of our product and what is needed for them to garner their full support and attention. What I can say with certainty is that we are all down here this week because we love this product and we all want to see it reach its full potential. 1 year ago, Nasdaq proposed a corporate initiative that introduced a call to action with the promise of market reform by reconstructing the regulatory framework, modernizing market structure, and promoting long-termism to attract more listed companies to the public markets sooner in its life cycle. While not directly called upon in the report, it is clear to us that a vibrant options market to support the public listings of small and medium-sized companies is an important differentiator versus alternative capital sources. And while we are currently challenged with options liquidity concerns in the bottom 1,000 names, we believe that market-based solutions that are fact-based, tied to measurable results, will help stabilize liquidity and introduce additional incentives to help foster growth for additional products to come to market. Furthermore, with a vibrant shift of active to passive management amongst investors, we need to ensure that newly formed ETP products are also afforded the opportunity to flourish by way of liquidity available from the option market. In the past year, we've had a lot happen in the markets, both domestically within options, along with the global impact of markets with changes to local and international regulation that will most certainly make for a spirited discussion over these next few days. We kick off the traditional panels tomorrow with a view of current and future option market volatility to up the ante, so to speak, bringing the voice of the buy side and professional trading groups to this conference. We want to ensure that you hear the voice of the most informed participants to deliver current information on what these intelligent individuals are observing firsthand in our markets, as we witnessed in February of this year and continue to see in this elevated volatility environment. We will also have 2 great CEOs, Adina Friedman and Craig Donohue of Nasdaq and OCC respectively, facing off in a fireside chat to review the key themes and their impact on the global capital markets. The rest of this conference is filled with very talented people who bring keen insights from their lens of expertise. We will cover the needs of the institutional customer in the listed option market, the voice of the registered investment advisor, the impact of liquidity from the changing regulatory landscape, and also highlight how technology is driving change for the retail institutional brokerage firms and their downstream participants. Taken together, our discussions have a clear focus, which is to improve the customer experience. Before I hand it over to your host of the conference, I wanted to thank a few people who have made this conference happen. First, to Mary Savoy and her team at OCC, thank you for your continued support and dedication to help make this a success. And from the Nasdaq team, thank you to John Black and Gina Miller, who led the content and organized the conference for the last 6 months. Your continued support and dedication were absolutely visible in this conference. And without further ado, your host for the conference, Dan Carrigan from Nasdaq.
Thanks.
Okay.
His mic's not on. 36 years ago. His mic's not on.
Guys, Mike.
Let's try this. 36 years ago today, the Options Industry Conference began on this very Wednesday in San Francisco. What a journey we have been on together with all of our participant exchanges. But I'm just curious if anybody knows the history of the hammer, what it is, how it came about. So in 1992, an advertising firm came to OIC, and they had a poster. They had a poster of this hammer, and on top of the hammer, they had grass growing on the top. And they called it the Chia hammer, grow profits with options. It wasn't a hit, just like you didn't have a hit just now. And then somebody in the room said, yeah, you don't use a hammer with grass. What you use a hammer for is to pry up nails. And the room went silent again. And then that was the idea. The hammer became the symbol of the options industry as a means to pry up profits. And in 1992, OIC set out on a 3-year, $6 million campaign to reintroduce options to retail and institutional investors alike. The hammer, the mascot of the options industry, has become symbolic with 3 words, the options tool. But that's just a past, the history. What we've all come here today is to get a look at our future state of the industry. And there's no better opportunity to do that than with the exchange and industry updates. So to lead us off on this segment, please welcome to the stage Patty Schuler from Box.
Thanks, Dan, and thank you, Nasdaq. It's hard to believe it's been a year again since I was last up here to give the exchange update, but time has gone by, and I'm happy to be here. In June of last year, we successfully completed several phases of a network structure upgrade. Participants were not required to make any changes. In July, we also introduced an expanded execution range for customer cross orders that will now automatically execute if the execution price is at or between the best bid and offer on box. The requirement that the customer cross order type not trade through the NBBO remains unchanged. In July, we launched the qualified contingent cross order type. We also updated the permissible execution range for complex orders. Complex orders will be validated against an extended price range based on the NBBO of the individual legs of the complex order. In November, we successfully migrated to our new billing vendor and reformatted our invoices with positive feedback from our clients. We successfully completed our new Chicago POP to replace the NY10 POP that was decommissioned at the end of 2017. Thanks to our participants who worked with our market operations team to get this done in a timely fashion. We also successfully completed a hardware and software refresh in Q1, allowing for increased optimization of throughput, lower latency, and reduced burst activity. We will also be moving our DR to Chicago sometime in 2018. Additional information will be forthcoming later this year on that change. We will also be implementing enhanced order price protections for complex orders in Q2. On August 22nd of last year, we successfully launched our new open outcry trading floor. We at Box are all proud of our efforts to see the floor succeed and grow these past several months. We want to thank our partners and customers who continue to support the trading floor. With that, I would like to introduce Eric Frait from Cboe Global Markets. Thank you.
Thank you, Patty, and good afternoon. It's my distinct pleasure to be here at what I believe is the 36th Annual Options Industry Conference, and I'm honored to be able to give you an update on behalf of my colleagues at Cboe Global Markets after an incredibly busy year. As I think you already know, Cboe is the operator of some of the world's busiest options exchanges, a futures exchange, and now several stock exchanges as well with the addition of BATS, our new partner, and the sum of our parts will be more than what we were before. As a combined company, we are now the second largest U.S. equities exchange operator and the largest equities exchange operator by value traded in Europe, having an ETF marketplace home to more than 250 listings, also operating Cboe FX, trading spot currencies, and the Cboe SEF, which trades non-deliverable forwards. Indeed, at this point, Cboe Global Markets has offices on almost every continent and in every time zone. It's been a momentous year for Cboe since our last appearance at the OIC. Following the close of our transaction with BATS, we engaged on what we are now still in, a multi-year, multi-exchange technology integration that, when completed, will allow our customers a single unified platform for trading and accessing Cboe options, C2 options, CFE futures, and all of our corresponding platforms. The reviews so far of our integration have been positive, and positive primarily because of all of the comments and all of the support and all of the ideas and feedback we have gotten from our many customers and stakeholders, of which we are very grateful. As announced recently, we have completed the CFE transition. The C2 transition will be taking place in just a couple of weeks. And we are targeting now October 7th, 2019 for the conversion of the mothership, the C1 options exchange, the traditional Cboe. All of this is being done with the goal of facilitating a conversion that will deliver a seamless, enhanced, expanded, and efficient trading experience for all of our customers. And as we work through this integration, customer feedback remains critical. So please continue to share with me, my colleagues, and any member of the Cboe Global Markets team your opinions and ideas and concepts for how we could make trading better. Additionally, no update on Cboe Global Markets would be complete without some comments about our proprietary index options product line, of which, as I think everyone knows, we are extremely proud. I think, as most of you know, this past Monday, we completed the conversion of the SPX AM settled non-weekly class to our hybrid trading system. Indeed, right now, this means that customers can trade our entire SPX index option offering electronically and in open outcry using our hybrid technology. Additionally, I'm very pleased to report that the SPX product line continues to grow and set new records. Indeed, in February, we set a single-day volume record of over 3 million contracts. This growth is also mirrored in our other major proprietary index products, specifically the VIX. Single-day volume record of over 4 million contracts was set in February of this past year, and April marked the 25th anniversary of the creation of the VIX index itself. Some of us in this room may actually just about be old enough to remember when that number started to be disseminated. We hope that you have taken a look at and enjoyed the historical context and additional educational resources we have made available in concurrence with the 25th anniversary of the VIX. And finally, I would be remiss if I didn't note that Cboe continues its dedicated holistic advocacy of our entire industry. For many of us, what happens in this options business of ours is very personal. We grew up in it. And in many ways, it made us as much as we made it. This is an industry that, as many of you know, falls in and out of the limelight. And to that end, Cboe believes that our continued advocacy of industry issues in Washington and around the country is paramount. We are going to be proposing, as many of you know, for the establishment of a new options market committee to be staffed not only by the representatives of the major firms and participants in this markets, but by the exchanges themselves. It may surprise you to know that being backstage here with my colleagues from the other markets is as close as I've been able to get to those individuals in over a year. In general, because of regulatory constraints, the exchanges are not permitted to talk to each other about many subjects. Well, we think it's time for us to get some forum set up to discuss things that are important to our industry. We are advocating for the establishment of a committee to have a long discussion about some of these evolutions that have come about in the last several years. The industry-wide penny pilot program, the growth of paired order auctions, the ongoing expansion of strikes, the stresses, perhaps, that are being put on market makers, and the state of market quality in our industry. It is our hope that by creating a balanced, equitable, and open forum under the auspices of the SEC, that we can explore an exchange of ideas on certain topics to ensure that the industry itself is guiding the evolution of where our business will be years from now, instead of tripping and accidentally finding ourselves somewhere that perhaps we don't want to be. With that, I'd like to sincerely thank the OIC, all of my colleagues, all of our customers, and all of our competitors for the hospitality of allowing me a few minutes to speak on behalf of the Cboe team. In particular, we wish to thank Nasdaq for hosting such a wonderful event in such a beautiful location. On behalf of Cboe Global Markets, we wish all the attendees a most rewarding conference. Safe travels, please, back to your homes. And with that, turn it over to Mr. Bracco.
Thanks, Eric. I want to say thank you to Nasdaq as well for hosting this year's event. I'm Joe Bracco. I head up sales at MIAX Options, and I'm happy to be here representing my colleagues from MIAX. The team has had a busy year for sure, and I'd like to take the next few minutes to summarize some of the really exciting things that we've been working on. I'm going to start on the business development side, where the focus has been on pursuing strategic alliances with a broad group of firms as we look to scale our business, and to bring on partners and proprietary products to the MIAX family of exchanges. One initiative that we're really enthusiastic about is the recently announced partnership with T3 Index to launch the Spikes Volatility Index. T3 Index is an Australian-based financial indexing firm that specializes in developing innovative volatility and option-related indexes across multiple asset classes. This launch will be the first of many joint initiatives between MIAX and T3, and is part of an exciting new partnership between T3 and our parent holding company, Miami International Holdings. The publishing of the Spikes Index was officially launched on MIAX on April 24th under the ticker symbol SPIKE. The Spikes Index will measure the 30-day volatility in the SPDR S&P 500 ETF. Following the launching of the Spikes Index, we'll focus on listing several proprietary Spikes options products that will set MIAX down a path to offer additional products that will provide investors with more accessible and cost-effective ways to invest in volatility. As you all know, SPY is one of the most actively traded securities on the planet, and its popularity creates a highly liquid market for the associated options. SPY options account for roughly half the notional value traded across all U.S. equity options every day. A couple of data points on SPY to help put this into context. According to data from Thomson Reuters, March 2018, SPY traded over $29 billion on average daily. And State Street Global Advisors lists SPY assets under management at just over $256 billion. Both MIAX and T3 are confident that the SPIKES product will be viewed by the trading community as a powerful alternative to current volatility offerings by the other legacy exchanges. The SPIKES index was designed using a new technique known as price dragging. So what is price dragging? Price dragging focuses on reducing the noise associated with routine quote adjustments and very low-priced options. SPIKES' improved truncation method excludes options away from the money after reaching the first two out-of-the-money strikes with prices of 5 cents or less. Both MIAX and T3 believe the enhanced design of SPIKES improves index stability and better reflects the nature of today's primarily electronic options market. Again, we're really excited about this product and this opportunity. We're around all week at the conference to answer any questions, so feel free to track down John Smolin, Shelley, or myself for more information and to learn more about SPIKES. Next up, I'd like to talk a bit more about what we've been doing in our core exchange businesses. On February 6th of 2017, we launched our second exchange, MIAX Pearl. On February 5th of this year, we set a new daily market share record, closing over 4% for the very first time, one day before celebrating the one-year anniversary of Pearl. This milestone kicked off just one of many significant milestones for that month. For Pearl to close over the 4% threshold in just a year's time was truly a remarkable achievement that the entire MIAX team is particularly proud of. In addition to the one-year anniversary milestone, Pearl marked a number of additional achievements worth noting. On February 16th, we set a daily record for contracts executed of 1.2 million. On the 23rd, we established a new daily market share record of 5.56%. Finally, and to wrap up February, Pearl set a new monthly record for total contracts executed of 17.6 million and set a new monthly market share record of 4.42% of OCC national volume in equity options for that month as well. In addition to those individual achievements, the MIAX Exchange Group also set a number of records that are worth highlighting. On February 22nd, the Exchange Group set a new daily market share record of 10.6% combined market share, and we closed over 10% market share for the month. We've worked hard from the beginning to differentiate Pearl from symbol specific pricing to an aggressive fee model. Our goal, create an ecosystem where participants from various segments of the marketplace can thrive, and we continue to improve the customer experience. As we look ahead, we're enthusiastically anticipating onboarding new members while current members scale into the increased market share. On MIAX options, we remained one of the industry's top-ranked pro-rata exchanges for time at the NBBO, holding that ranking 38 out of the last 40 months. Shifting to the member experience, I'd like to highlight that we've just about completed the full suite of our complex order book, having added price improvement mechanism, which we call C-Prime, and having recently added derived orders in February. We'll round out this functionality when we introduce complex orders tied to stock that will come midsummer pending SEC approval. We've also improved our already robust suite of world-class risk protections with the addition of single side protections and high-speed purge ports. At a high level, when triggered, single side protections will cancel all standard market maker quotes and block all inbound quotes and e-quotes for a particular side of an individual option. This protection is available in both the simple and the complex order books. High-speed purge ports are optional ports that enable a member to remove all or a subset of quotes and or block all or a subset of inbound quotes, as well as cancel all day orders. Purge ports are available on both MIAX and Pearl. And finally, I'd like to talk about and again introduce MIAX Emerald. Last month, we announced to the street our plans to launch our third options exchange. Back when MIAX was launching MIAX options, folks were asking, why did the market need another options exchange? We believe we've answered this question by demonstrating that there's value to new entrants that bring innovative technology, exceptional risk protections, fair incentive programs, and equity ownership opportunities. With basically the same rules and functionality of MIAX options, existing MIAX options and Pearl members joining Emerald will have minimal development and testing impact. The Emerald market model will be pro rata allocation like MIAX and maker-taker pricing like Pearl. Emerald members will be able to utilize the same MIAX Express Network APIs and in some cases, existing connectivity to connect to the trading platforms, market data systems, test systems, and DR facilities of MIAX Emerald, MIAX Options, and MIAX Pearl. Our goal is to bring all of the qualities of the MIAX Exchange Group to this new market model and maintain an aggressive fee schedule with a sensitivity around low non-transaction fees. It's important to note, Emerald will compete in a very addressable area of the market. Quick stat for you. As a result of market dynamics, on any given day, approximately 18% of the volume executed in multi-listed equity options is done in a hybrid market model with pro rata allocation, maker-taker pricing that we will now pursue. As an exchange group, we cannot get exposure to this market segment under current SEC regulations without filing for an SRO. We stand behind a proven track record that clearly demonstrates that we can build critical mass quickly on new platforms and provide for a better trading experience, which we know will make folks want to choose the MIAX exchange group for their trading. In addition to the folks I mentioned here earlier, we have a number of others here from the team, including our CEO, Tom Gallagher, our CIO, Doug Schaefer, and Tom Kennelly, who heads up our trading operations team. Please make a point to seek any of us out or stop by our cabana on Thursday afternoon. We're happy to answer questions about spikes, Emerald, or any other topic that's on your mind. MIAX will be hosting our first OIC in 2019, and I can only now start to appreciate the planning that goes into an event of this scale. So enjoy your time here, and look forward to seeing you around the conference. With that, I'd like to introduce Sean Feeney, Managing Director, Global Trading and Market Services at Nasdaq.
Thank you, Joe. Exciting times for sure. And thank you all for attending the 2018 Options Industry Conference. Of course, thanks to OIC and OCC for providing me with the opportunity to update you all on the state of the business at Nasdaq. For those of you who don't know me, my name is Sean Feeney. I am Managing Director, U.S. Options Sales at Nasdaq, and I joined there in December of 2016. Prior to that, 16 years in this beautiful industry, different roles, most of an emphasis on the trading side. It is an honor and a privilege to be with you all here today. Nasdaq manages PHLX, NOM, BX, Nasdaq ISE, GEMX, and MRX exchanges, each of which are tailored to address the needs of all manner of market participants. As many of you may recall from my colleague Tanya Potwa's update last year, we had already finished the migration of the Nasdaq GEMX exchange onto our INET technology, and I'm happy to report that the task of integrating the ISE family of exchanges onto the Nasdaq infrastructure was completed on August 21st, 2017, after the implementation of Nasdaq ISE in late July and the Nasdaq MRX exchange in August. We couldn't have completed this project without the help of our strategic partners, our customers and clients. The feedback you've all provided throughout this process has proven invaluable to a smooth transition. And on behalf of the entire team at Nasdaq, I'd like to relay our most heartfelt thanks. I won't get too deep into the weeds on the systems side because I only have a few minutes, but from a systems perspective, Nasdaq has made several improvements to our exchange suite. We've added additional flexibility for market maker self-match prevention on NOM and PHLX, which will be expanding to ISE, GEMX, and MRX markets late next month. We've initiated surrender capability for Pixel, our price improvement auction mechanism on PHLX. Also on PHLX, our floor brokers are afforded additional latitude using our 30-second snapshot feature to effectively and efficiently price and cross complex orders in the crowd. Also coming up on the systems front, we will be introducing additional protections on the butterfly and box spreads on PHLX and ISE, as well as market order with protections on PHLX, and we'll be improving the acceptable trade range for routed orders on ISE, GEMX, and MRX. On February 16th, 2018, Nasdaq was the first options exchange to launch Monday expiries in the underlying SPY. The trading opportunities provided with this additional expiration cycle have shown immediately industry returns, and to date, SPY Mondays have traded over 12 million contracts. Earlier this year, from a listings perspective, Nasdaq has led the charge on reform, reducing the waiting period for IPO option listings from 7 days to 5. And to switch gears a little, on January 4th, 2018, Nasdaq launched PM settled options on our flagship index product, the Nasdaq 100 on PHLX. These options trade under the symbol NDXP and are now traded on both the PHLX and ISE exchanges. As electronic trading in the index options space has migrated toward PM settlement, we're pleased to offer this additional full day of trading to all industry participants. Traditional third Friday Nasdaq 100 options continue to be listed under NDX and remain AM settled. In June of this year, Nasdaq plans to reduce a reduced value index on the Nasdaq 100, bringing the notional value of the NDX down by a factor of 5. We expect both the retail and buy-side communities to embrace this product, which will trade under the symbol NQX on ISE. We've been working with our strategic partners on the liquidity front to create a positive experience for those wishing to expand their trading strategies to include NQX, and this new product will be cross-marginable at OCC. Listing NQX on ISE also allows for both simple and complex order availability, and the product will be PM settled. Looking forward, as Nasdaq actively rewrites tomorrow, we plan to reintroduce sweep and cross functionality on the ISE platform. We will expand our binary order entry protocol functionality on NOM, and we will be introducing our hallmark ITO depth of book feed across ISE, GEMX, and MRX exchanges. Additionally, we will be implementing off-floor fix routing to PHLX floor brokers and upgrading fix inbound workflows to the ISE via the Precise platform. Lastly, we plan to introduce complex order functionality on the MRX exchange later this year. Please feel free to pull any member of the Nasdaq team aside at any point during the conference. We do look forward to speaking with you all, and thank you all for your time and attention. At this time, I'd like to turn the mic over to Mark Krommenhoek from NYSE.
Should have gone for the pocket square. That's fantastic. Thank you, Sean, and thanks to this year's host exchange. Thanks also to our partners at OIC, Mary Savoy in particular, as well as Jennifer Hopkins of the Hopkins Consulting Group. You guys put a lot of work into this, and we thank you. Beginning in 1982 and every spring thereafter, the industry has celebrated the release of Fast Times at Ridgemont High, my alma mater. And so you're here, I'm here, and that makes this our time to reflect on all things listed options. We're a young and growing industry, and as proof, ponder this. There have been more OICs since the year 2000 than there were before it. And I'm old, so that makes no sense to me. Now I'd like to take this opportunity to update you on the promises that the NYSE options team has made here at OIC over the last few years. We promised you improved performance, we promised you new functionality and continued industry advocacy, and we delivered. NYSE Options continues to build and improve the performance of our systems. We made changes to code, upgrades to the network, improvements to the hardware. Made a goal in early of 2017 to cut our average latency in half, pull in our 99% latencies dramatically, and we've accomplished those goals. NYSE will continue to look to reduce the latency and improve determinism in our system in subsequent releases this year. Now, some specifics on functionality changes. On NYSE American, we introduced Bold. If you work at a firm with a deep dev queue, we offer, as a simple configuration setting on a port, the opportunity to source additional liquidity for all marketable orders prior to routing, canceling, or posting orders in the book. Simply set it and forget it. Next, soon after the conference ends, we will open our Cube electronic auction mechanism to complex orders. These orders can be of any size and can trade in penny increments no matter the MPV of the option. Now for NYSE ARCA. Last April, we introduced the light-only quote type, which prevents inbound quotes from trading with non-displayed interest. This has been extremely helpful in reducing the variance in economics for our market maker partners. On both platforms, NYSE offers an execution identifier now on each execution that is also passed on to OCC for reconciliation. We also offer the flexibility to ignore certain orders in your risk control mechanisms which could unnecessarily trigger the mechanism. Again, set it and forget it. Finally, industry advocacy. NYSE continues to play a pivotal customer-facing and industry leadership role. As proof, Jim Hyde is representative NYSE rep to STA, chairman of the Listed Options Committee of STA, and on the board of directors of Feeney. He's also the secretary. I know many of you attended the Feeney annual meeting last month at the New York Stock Exchange, widely hailed as the best event in years. And Jim is certain, 100% certain, he was a huge part of the success of that event. Speaking of STA, congratulations to our colleague and amigo Slade Winchester, who is now vice chair of the STA Listed Options Committee. Yes, we have been busy enhancing our value proposition, but what did NYSE not do? We did not add an exchange, nor did we keep open another copycat or internally redundant electronic exchange market model in an industry we already believe is too fragmented. That's right, we didn't use two medallions. We were asked the new exchange question today behind closed doors at SIFMA. We would like to answer that question in public. When there is client demand for an innovative market model that we believe offers the industry key differentiation, we'll jump in with both feet. Without real demand or real innovation, NYSE options will avoid implicit industry taxation via connectivity, regulation, and complexity. This year, NYSE celebrates its 226th anniversary, yet we remain an innovator. This quarter, NYSE options will launch FANG Plus index options, cash settled, European style options on the FANG Plus index. FANG Plus is an equally weighted index that provides exposure to 10 highly traded growth stocks that represent the top innovators across today's tech, internet, and media companies. FANG Plus options leverage the already successful NYSE FANG Plus index futures on ICE. Stop by the NYSE booth or find anybody on the team to find out more. With that, thank you very much. It is my distinct pleasure to introduce Ellen Greene of SIFMA. Thank you very much.
Good afternoon. I'm Ellen Greene from SIFMA. We got a little out of order here, but I'm going to give the SIFMA update now. I'd like to thank Nasdaq and OIC for hosting this year's conference and appreciate the opportunity to provide a brief update on SIFMA and some of the issues that the Listed Options Trading Committee focuses on. SIFMA is the voice of the nation's security industry, bringing together the shared interest of hundreds of broker-dealers, banks, and asset managers. As an industry association, we advocate for effective and resilient capital markets. SIFMA utilizes a committee structure that brings together industry representatives to form consensus opinions on important regulatory and business policy and practices issues. SIFMA's Listed Options Trading Committee focuses on market structure and its impact on liquidity and fragmentation, which is a frequent topic of discussion since there are currently 15 exchanges with number 16 on the way. SIFMA's trading committee also focuses on regulation and market resiliency and its impact on customers, firms, and market makers. This focus allows us to anticipate and react to market events with an eye towards improving the current processes to benefit all market participations and enhance investor trust and confidence. At SIFMA, we take direction and prioritize issues based on member input. Once we identify an issue, and provided we have member consensus on the proposed solution, we work diligently with the regulators, such as the SEC, and exchanges like Nasdaq, to educate them on our position and why we think change, or sometimes status quo, is important. Since SIFMA is the voice of our industry, our views are generally well received by our constituents. As many of you know, SIFMA frequently advocates for harmonization of non-competitive rules, such as the Options Regulatory Fee, or ORF. While SIFMA is engaged in many issues, I'd like to highlight a few key initiatives currently underway which require coordination by the exchange families as well as OCC. SIFMA members have asked for many years to advocate for changes on the current give-up and CMTA processes, which allow an executing broker to give up or CMTA a trade to a clearing firm, regardless if they have an agreement in place with them. This creates risk for the clearing firm, since they may not receive instructions for the trade at the time of the execution. SIFMA appreciates the support we've received from Cboe, who is currently working on a rule filing to address the issues raised by the industry in what we believe is a risk issue as compared with a competitive one. SIFMA also applauds the OCC, who is working diligently with us to modify the current CMTA rules and will later introduce a customer ID and credit limits to create more transparency and reduce risk for clearing firms. SIFMA also continues to work on strike listings, which has been a long-term project for our committee. In 2018, we've switched gears and have taken a more data-driven analytical approach. Working in partnership with OCC, they've provided data to help us better understand customer behavior based on open interest. This methodology should allow us to better define the parameters for listing long-term series, and our goal is to modify the rules housed in the Options Listing Procedures Plan, or OLPP, which governs equity option long-term strikes. Once this is accomplished, our goal is to take a similar approach to weeklies and fold them into the OLPP to harmonize strike listing rules across all exchanges. SIFMA is also engaged in the obvious error arena, as recent events in the market demonstrated that the current rule set resulted in suboptimal outcomes for market participants. SIFMA recognizes that the markets have changed since the current rules were adopted, and we are investigating potential changes to protect market participants. SIFMA looks forward to re-engaging the exchanges on this important topic as we pursue potential tweaks to the rules in 2018. And at this time, I'd like to introduce Amy Lawson from OIC.
Hello, as Ellen said, I'm Amy Lawson from OCC, our sister company to OIC. I'm the first vice president of product development. Excuse me, I just have to explain my voice. The emerging spring in Chicago has attacked my voice, so I will try and bear with me, and I will try and keep my comments short, also because Dan Kerrigan just told me, keep it short, we're running late, so I'll do my best to speed through. But as the head of our product development team, you probably think I'm here to talk to you about all of our great innovations and new products, right? No, that's not what we do at OCC. While we think we're innovative, really it's our exchanges that work with the industry to flesh out their ideas on, enhanced investment vehicles and risk management tools, and OCC supports them. What I'm really here to talk to you about are give an update of what's going on at OCC and how we do support innovation in the industry behind the scenes. We have 4 main initiatives that we're working on this year. As the foundation for secure markets, we are focused on trying to help the marketplace. We're advocating for the right level of regulatory capital enhancements. We are also enhancing our own financial safeguards. We're working on developing a new clearing system. And, of course, OIC, investor education, is really one of our primary goals. So, over the years, OCC has continually, increasingly stepped up to be an industry advocate. And this year, 2 of the main issues that we're working on the industry advocacy side are regulatory capital issues to make sure that they're appropriate to, prudent to reduce risk, to reduce risk, but also efficient. So the 2 issues are the supplemental leverage ratio and also the risk-weighted capital charges. And since I'm keeping this short, I think you're going to hear a lot about that over the next couple of days. We have 4 of our senior leaders that I would be surprised if they don't mention what we're doing on that front, including Craig Donahue, our chairman. There's actually a really good clip that he did on Lothian today that kind of explains why these are important issues and what OCC is doing to help the industry. On financial safeguards, OCC is working on continuous improvement to make sure that we have the right level of capital to be prudent and protect the industry. But we also realize that overfunding of capital is harmful for the industry and liquidity. And we are working on our margin models and our clearing fund to make sure that we have the right levels. And you should hopefully are going to see some changes in that area. The third area is our new clearing system. I believe I announced last year at this podium that we were going to rebuild our clearing system. We want to take advantage of modern architecture and new technologies that will help us going forward to build a more flexible, more cost-efficient system so that we can, A, lower costs, and B, have better timing to support true innovative industry initiatives. I'm sure all of our exchanges will be happy to hear that. As far as the status of that project, in 2017 we worked on requirements. We worked on whether we wanted to buy versus build and did analysis of potential vendors. And we're all waiting with pins and needles, as our board meeting was yesterday and today, to solidify our direction going forward. But either way, we will be working, planning, putting together a plan and a timeline, and we'll have more information and increased requirements in this year with the potential build out in the next couple of years. And our 4th major initiative, I'm actually not going to talk about because Frank Tirado from OIC is here to tell you about what we're doing on the OIC front. Frank? He's coming.
Good afternoon, everyone. My name is Frank Tirado. I am Vice President of Education for the Options Industry Council. I am proud to say that the OIC has been delivering options education for 25 years. And for 25 years, the OIC has been helping investors and market participants better understand our markets. And OIC will continue to provide investors with free, unbiased educational content in order to promote responsible use of options. In fact, last year, we at OIC had more than 222,000 investors participate at OIC's robust digital as well as live programming. 222,000 individuals participating in our markets. And OIC will continue to adapt and align our efforts with the goal of growing the U.S. exchange-listed options market. So I'd like to begin to share with you some of the major projects that we are excited about and we are offering up to the options industry. First and foremost, our website. Some of you may be aware of optionseducation.org. That is our website. It will be redesigned to be mobile adaptive, have a modern design, and streamlined content. So we will be cool again. And so that'll be launched in this summer. And this summer, keep your eyes out for optionseducation.org in our new redesign. But we have been adding content to our website already. We have added animated videos, and we'll add 17 videos this summer on option strategies from the covered call to the iron condor, all explained under 6 minutes. And that content is available to market participants through our content licensing agreement as well. We also have tools, Option Strategy Builder. We make it easier for investors to build strategies like covered call, cash secured put, and the collar in 3 simple steps. But let me tell you some of the more exciting initiatives that we have going on today, starting with institutional education led by Joe Cusick. Please make an effort to reach out to Joe Cusick because we have some exciting news at this conference. We will be launching our study conducted by Greenwich Associates on Friday at 10:45. The study, which I have in my hand, is how institutional investors use and think about exchange-listed options. So on Friday, everyone will have the ability to hear Greenwich Associates moderate a panel, get a copy of this study that is being launched at this conference on Friday at 10:45, which is a big effort for OIC. Another significant effort and commitment that we have made is with CFA Institute. Why CFA Institute? Well, CFA is probably the most recognized investment management designation in the world. It has 135,000 members worldwide, has 150 chapters in Europe, U.S., and in Asia. And we intend to expand our participation with that. We've already worked with chapters in New York, San Francisco, and Philly, as well as Chicago, thanks to Joe Burgoyne, who proved the concept that option-centric education is crucial to professionals that are in the trenches with asset managers, et cetera. So we are committed to that. On the financial advisor front, those efforts are led by the human dynamo Eric Kott. Now, if you don't know Eric Kott, 1, I'm surprised, but 2, you can meet Eric Kott Friday morning. He is leading a panel discussion to give you an idea of what financial advisors think about options, how they use options. So Friday morning at 8:30, Coffee with Kott. Please attend that because I think this area with financial advisors as well as options, they tend to underutilize options, but that session should be an interesting one for the discussion. Another significant commitment OIC has made is collaboration with professional organizations. We have collaborated with the Investments and Wealth Institute. Investments and Wealth Institute has over 5,000 members worldwide, and we, for the first time, collaborated with a professional organization to produce a certificate program. And this program, entitled Fundamentals of Exchange-Listed Options, is a program now that is being spearheaded by Eric Kott and something made available for financial advisors. And so that program is live and ready and is a certificate program that is under the designation of Investments and Wealth Institute. We also continue to collaborate with exchanges in reaching financial advisors. Eric has also spearheaded proofs of concepts regarding RIA, Registered Investment Advisor forums, and has done a significant number of different forums in different markets with exchange partners to get the word out with financial advisors. Next up is our efforts with individual investors, and that is crucial because, as was mentioned earlier regarding our efforts in the history of OIC, that's where it all began, with individual investor. Individual investors are important to OIC. Those efforts are led by Joe Burgoyne, and Joe has created a robust digital platform that includes webinars, online summits, and the Wide World of Options radio show. In fact, that show was downloaded more than 66,000 times last year. Our webinars, we attracted more than 10,000 individuals to our monthly webinar program, and our live in-person seminar program attracted more than 1,000 people. In fact, we are now experimenting with our live events to simulcast those live events, not only to attract live in-person individuals, but also the audience online. Last but not least is OIC has a British accent in the name of Gary Delaney, who is here from London. And the exciting news about what we do in Europe is that this year we have commissioned a report by Burton Taylor on European order flow into the U.S. options market, and will highlight trends, challenges, and opportunities. The report will be released at the IDX conference in London in June. If you're interested in that report, please reach out to Gary Delaney. We will be at the OIC booth throughout the conference, and make sure that you are on that distribution list. In conclusion, I would just like to thank, on behalf of OIC, I would like to thank Nasdaq and all the exchanges, member firms, OCC, for supporting OIC during the last 25 years. We will continue to collaborate with exchange partners and member firms to accomplish our mission. And with that, I just encourage you to drop by our booth and meet our team with Mary and David and Eric, Joe Cusack, Joe Burgoyne, as well as Eric Cott. And with that, I'd like to introduce Jim Toes from STA.
Thank you, Frank. Thank you, everybody. Thank you, OIC. Congratulations to Nasdaq on getting the good weather. Thank you. I'm Jim Toes. I'm with the STA. The Security Traders Association, for those of you who don't know, was founded in 1934, and we were founded in response to the creation of the Securities and Exchange Commission, which was also founded earlier that same year. Today, our mission statement remains very similar, very consistent with what it was back in 1934, and that is to engage the SEC on matters of market structure that are of interest to our members. There are obviously several trade associations that are in the marketplace today. Where are we different? Where are we unique? There are probably three basic areas that I would just touch on. One, we serve the individual who works in the financial services industry. That drives much of what we do as far as in education and in career development, is that we represent and we serve the individual. Second, we strive to be a business model agnostic organization. This enables us to be flexible in our ability to changes in the market structure, so our ability to attract board members from different segments of the industry is very positive, since we maintain that business model agnostic guiding principle. And then third but not least, it's the foundation of the STA really is built upon the 20 affiliate organizations that we have in the U.S. and 4 up in Canada. These are independent organizations. When you join a local one, be it in Chicago, St. Louis, New York, Boston, and a handful of other ones, you do become part of the national organization. And it's through these organizations that we obtain geographical diversity and also grassroots nature of the organization itself. Today, STA is focused on many of the issues which are impacting equities and options, whether it be the Reg A, TSN, order handling rules, tick pilots going on in both equities and options. But in kind of staying with the theme of the previous speakers today and kind of using this as an opportunity for like a year-over-year reflection on some of the work that exchanges and associations have done, I think if we were to look back at STA a year from now, probably the thing we're most proud of as far as in the past 12 months is the initiative that we have with our Women in Finance effort. We are in the third year of this effort, and to see how what started as an effort in Chicago then grew to the national level and now has gone back down to the affiliate levels as far as smaller events across, I think we have around 12 affiliates have an organized Women in Finance effort. We're very proud about the effort that it is doing for the organization. It has literally, as I used this line earlier today, it has breathed life into the organization, and we hope that all firms can, have this as a priority for not just this year, but going forward. In closing, I just wanted to kind of maybe just build upon something that Greg had mentioned when he first got up here, and it's really about our role in the industry, all of us. If you look around this room, there's a wide range of firms, and we compete with each other on a daily basis. And while the financial services industry is, not a zero-sum game, more times than not, one firm's loss is another firm's gain, so we compete pretty fiercely. But it's really moments like this when we kind of come together that, as a group, as Greg mentioned, that we really are acting as guardians of the market and the investors who we all serve. Even the oldest, most experienced, and most talented person in this room, would have to admit that none of us invented the financial services industry. We all inherited something from a previous generation, and it is our collective responsibility to safeguard what we have today, and through intelligent decision making, leave it better for the next generation to come. All right, so with that, I want to just thank OIC for inviting the STA to be up here on the stage here today to spend a little bit of time with you. I want to thank Nasdaq for taking the lead on this effort, and we hope to see as many of you as possible in Washington, D.C. this October. Thank you.
All right. Thank you to all of our presenters. A truly great start to OIC.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.